Thank you. Do the slide thing here. There we go. Cool. Thanks. So James Varga. I'm the founder and CEO of the ID Co. I'm a bank data addict. I've been surviving off bank data for about 10 years, I think now, since Gavin and I worked together at Money Dashboard. Just to give me an idea, because we tend to get a pretty diverse crowd here. Who's a fintech? Most of us. The banks? Any banks? Couple. Regulators, sometimes they show up? No? So we're a fintech company. We focus on using bank data. We've been doing that for a while. We do that as a global B2B open banking SaaS platform, you could call it, called DirectID. And we do that over a bunch of countries. We live and breathe bank data. So when Helen said, come and do a little talk, I was kind of questioning what should I talk about. I thought I'd share a little bit of our perspective. As somebody on the opposite side of the scale, I think, than infrastructure and regulators, we're living and breathing this like a lot of us every day. And really that's part of the purpose for Open Banking Excellence, was to try and bring industry together, trying to figure out where the next hurdles are, and how collectively to overcome that. So hopefully that'll be a little bit interesting. Helen also suggested I do a demo on something recently, so I thought I'd share a lesson, a learning, and where we see some of the value in a product that we've launched recently. It's not a sales pitch, I'm not here to do that, but I think there's a real sort of insight that you get when you start connecting lots of this data together, as I was talking earlier. Please, I get bored talking to myself or listening to myself, so if you have a question, happy to riff and digress. I'm pretty bad for digressing. I guess the first thing to talk about is open banking and bank data is changing the world. I mean, one of the reasons why we're all here is that there's a huge movement going on in the world. We're seeing that all over the place. I think 9, 10 countries now. Gavin will be my fact checker tonight. 10 countries, I think, roughly have launched open banking programs. The regulators have put in a huge amount of effort. Banks, sometimes reluctantly, I think, are being forced to give up this data, to give access to it. Open banking is all about empowering consumers for that data. There's a huge amount of effort being placed in something that I think, honestly, I think is going to change the way a lot of us interact with financial services. It's hugely exciting to be at a place where this is all happening under our fingertips. And that's a bit of the challenge, right? Is with that change that's happening, how do we take advantage of that? 2019, with September and PSD2 deadlines coming in, depending on what happens with the RTS and forcing banks and timelines and so forth, I think is going to be a really interesting year. But to a certain extent, I think it's all pointless. Open banking, the constructs around it, Richard kind of mentioned this, I completely agree with him. As consumers, as an industry, or sometimes as regulators, we talk about educating the consumer, we talk about trust marks and all sorts of things that have to go into open banking, market acceptance, promotion, media, all the rest of it. I think a lot of that is great. The regulatory drive for opening up access to data, absolutely, given financial services and the risk adversity that the industry has, absolutely has to be there. But it's the data that counts, right? At the end of the day, open banking is just open data, it's just data. It's what you do with it that counts. And I think in a lot of conversations that we get involved in, this is still a missing element, right? We're still focusing to a great extent on how to push data out, how to give it away, how to support the liability models or those frameworks for that, the infrastructure around it. We always operate on a very consumer-focused level. For us, it's all about how you apply that data. And I think it's that part of the challenge that's still there as an opportunity for a lot of us. Half the room is fintechs. So a lot of us, or most of us, all of us, are there to consume this data and help people do things with it. I think it's that's the big challenge. Am I bonkers? Does that make sense? Yeah? You know that's good? Just making sure. You never quite know. I think I've been doing this long enough that I find I'm slightly insane about this sort of stuff once in a while. There's so much left to do, and you get stuck in it every day. In terms of the top-down approach, I think there's, as I talked about, there's that whole focus towards providing this data, and still a lot of challenges. One of the challenges around regulatory structures, they don't preconceive all the different use cases. In the UK, we still have a lot of challenge around how this data can be used. Who needs to be the AISP? Who's the regulated entity? Can you share that data with another third party? What consents are involved? You just have to look at some of the use cases for which open banking in the UK was designed on. I'm going to pick one called price comparison. It's a great example. I don't think we've figured out yet how open banking works with price comparison. To be a regulated entity, to be an AISP, you have to do account information services, which means you have to give that data aggregated back to the consumer. In a price comparison use case, it's not about that. It's about taking that bank statement data, understanding the individual, and suggesting products. If we look at GDPR, we're not supposed to use that data as any data that we don't need to use. But there's a gap there that the regulators haven't, I don't think, quite got their arms around. And there'll be lots of these gaps still, where price comparison doesn't fit the model that exists today. But somebody has to be regulated to be the AISP, so you're forcing those price comparison sites to do that in order to access the directory to get the data to go and do things with it. On the other side of the coin, we've got banks still. Performance, we talked about, is still a bit of an issue. We see a lot of downtime with a lot of banks, right? I don't get how banks as a big financial services institution, I do get it. I'm not dissing banks in any stretch of the imagination. There's a huge amount of effort that's gone into this. There's a lot of work that's involved. It's going to be challenging to try and implement these APIs and these structures, a big challenge, right? But in order for us to start to rely on this data, we have to have uptime, you know? Shutting down for maintenance for 2 hours is a big challenge for people like us. Inconsistencies in data is a big challenge. Account holder name, been a hot topic, is a challenge. A lot of use cases involve validating that person back to the individual with account holder names. The regulated entities, the AML compliance office, KYC guys, all those compliance and audit people can't tick a box, so they feel that they can't use the data as much as we would like them to use. Balances and inconsistency, data quality, those are all challenges. So still a lot of work to do, but it's all around providing that data into the industry. Where I get much more excited is the consumption, right? Is that bottom up, is the opportunity to use this data to change lives, to do things with it, to put consumers in control of that data and get them to do things with it. And it's that two-sided model that I think is the real important lesson, or one of the important lessons that we've learned over the years. DirectID's been up and running for about three and a half years now. We've seen at least 100 use cases. Those that are successful tend to have a benefit on the business side as well as the consumer. If you can't create that network effect between the two, the chances of that being successful are hugely diminished. A fraction of what they are for those that do achieve that. From a business point of view, and this is, I think, a big opportunity for all the disruptive startup banks, digital banks, fintechs, wealth advisors through to insurance companies, is if you can consume that data, then you can compete with the bigger propositions out there, right? Accessing this data is now very easy and quick. It's becoming commoditized more and more as we move forward. But it's that opportunity to consume that data to do with it that really gets exciting. Some of the use cases that we see in lending, of all those 100 use cases, is lending for us that has seen that balance between impact to the business and business pain and consumer benefit. You know, we've seen conversion rates with some of our customers go up 20 to 30%. If you're a lending company, a mortgage company, credit card, insurance, anything like that, and I could turn around and say your conversion for good transactions is going to increase 20 or 30%, that's amazing. That's game changing. That then puts you a step ahead of what even a lot of the big banks can do. So as a credit union, I think there's a huge opportunity for all the small banks to use this data to compete with the big ones in an increasingly competitive space. At the same time as that, it's a safer process. We see 7.5%. We've got 3 customers that they've shared stats with. and it averages out about 7.5% reduction in fraud. If you think about a big business and any sort of financial institution, that's a huge impact into the bottom line. If we can't create convenience for the consumers, though, they won't go through it. So it's about finding use cases where you can get the business benefit from, and a 30% and a 7.5% would completely change the business, while still at the same time giving something for consumers. Bank data is nothing new. We've been using it for 25 years. I know someone who used to work at JPMorgan Chase 20 years ago, 25 years ago, and they were using aggregators to connect people to the bank account, grab that data and use it to underwrite loans. The difference here is we've got a much more regulatory driven, a much more accepted infrastructure for it. We've been using bank statements for 50 years on mortgages. It's none of that's anything new, but it's how to get that next level, how to commoditize this, how to make it accessible for the consumer. There's only one thing that motivates individuals, and that's convenience. We all like security, we all like privacy. Those are all good things to have, especially when we're worried about it. But it's the convenience that is the one thing that we see time and time again changing behavior. Got some notes here, so I'm just checking. Make sure it's good. So one of the things I thought I'd talk about is income verification. So a lot of our focus, especially in the lending space, is applying this data to business problem. Every credit-based decision has a fundamental need around affordability. One half of that question is income. Income is a seemingly simple challenge, but actually when you get into it, is really, really difficult. And I think fundamentally for me, the reason for that is not everyone's like me. Everyone that's applying for loans and credit cards and mortgages isn't like me. Most of them don't even get paid monthly. In the world we live in, gig economy to cash workers, students and graduates, retired people. Actually, one of the most interesting things that we've seen in digging down into this is that income isn't ubiquitous. There's no consistency with it. And far less consistency in the US. So in the US, about 10% of the people that we see applying for loans on our platform actually have a monthly income. I was originally thinking 40 to 50% is what I would guessing. But actually there's so many people now that are zero contract hours, that are the gig economy, that are whatever, that a lot of them don't have a steady income. Or they might have a steady income, it's just not from the same person every month in a consistent way that all the salaried people of the world kind of live. In the UK it's about 20%, so a bit different. DirectID Insights, which we built income on top of, or verified income on top of, is all about making this data accessible, right? So this is a bit of a journey that I think is there just as much for us as any business that wants to use bank data. You have to start that journey, you have to start to get to know it, use it, get comfortable with it. A lot of that starts in a manual underwriting process and then starts to migrate up into your automated decisioning. But income is for us is one of the really interesting bits. And as we were looking into what we call verified income, it was also really interesting. We made a mistake a year ago when we started this. The first product that we launched flopped. Nobody used it. And it was because of those preconceptions and those assumptions that we were making from a non-underwriter point of view. So we went back to the drawing board. We started sitting down with underwriters, credit risk teams, prospects, customers, whatever, and really tried to unpack, taking a first principles approach, trying to unpack what it was in that number that they were really interested in. And we found out that it was context that was missing. Just looking at a bank statement, looking at a recurring transaction or a regular payment into it, and then assuming that was the income, wasn't enough. These are teams of people that only deal in negative data, right? Every day they look at the bad stuff, right? They try and disprove everything. And what they need is a little bit of context. They need to understand what that salary is. They need to be able to cross-reference it. They need to look at, is it recency? Is there volatility in it? Is it up and down? Is it consistent? Is it the same supplier? Is it two? There's all these questions that an underwriter needs to understand. For me, with bank data, this applies to any aspect of bank data whether you're doing credit risk, fraud prevention, price comparison, whatever, is that you have to kind of go all the way back down to the simple question. and then build up from there. This is a really complex issue. We spent about a year coming up with that number and that number, because there is all those variations, right? There's a big, long, huge tail of different use cases and different aspects. And it takes a lot of effort to go through that, you know? That's the same for me as price comparison. When we talk to banks about, you know, generating price comparison engines or real-time pricing engines for customers so they can price products at point of application or whatever it is, it always comes back to the same thing. How can we take that complex problem, make a simple answer out of it? So that's a little bit about us. I think, and our product. So the key lesson here is for me is context. Open banking is about data, it's just data. We have to start applying it as an industry to different parts of the pain. There are different pains, different business pains that we see out there. And if we can do that, we can start solving those problems. If those problems can have a benefit for consumers, then we can change their behavior, we can get them to use this, and things will start to roll on from there. It's going to be a lot of work, it's going to be a lot of pain for a lot of us, there's going to be a lot of failures, but we all have to have faith in that there is value in this data. I think the innate belief that we all have that there is value in this data, and keep trucking on. So thought I'd take that approach. Hopefully it was interesting. And if you want to talk, I'm happy to talk for Scotland and rant away. I'm happy to do so. But yeah, no, thank you very much.
So, does anybody have any questions for James, or would you prefer to leave those for a chat over a beer? Please.
A really interesting presentation. So I'm curious to get your view if there is something more than a pure belief, and if you see, like the example with the income is really interesting because it's a really complex problem. You need to go step by step and basically untangle the issue gradually. So do you expect this sort of pattern to follow over the years? So in the next 10 years, we'll be able to precisely show the income and the cost and the incomings and solve the price comparison problem, or do you expect there to be any sort of like step change in the next couple of years?
Yeah, is there going to be a step change? I think the industry is so used to doing things that it does today that a step change in financial services, an incredibly risk-averse industry generally, is very, very unlikely. Not to digress, I was on a panel about a year and a half ago, and it was an Oxford debate, which I love and hate at the same time, if anyone's had to be involved in one of those. But it was maybe 2 years ago, it was cryptocurrencies, and is cryptocurrencies going to change the world overnight? And it was the same sort of conversation. And my argument was, no, it wasn't. For us to displace capital markets with a cryptocurrency is almost impossible. There's too much inertia already there. I think we do have to take a step-by-step approach. Things like credit risk decisions have been done the same way for so often that sitting down with a credit risk officer and saying, we're going to ask you to do something completely different. It's like driving an electric car, or buying an electric car, or buying an autonomous car, right? Are we going to all start buying autonomous cars and driving around? No, we're going to, have a friend buy one. We're going to have a couple rides, maybe holding the steering wheel while you get comfort with it. I think we're asking the same thing here in the industry. There is a fundamental change that open banking and bank data can provide for a lot of these businesses and processes, but doing that overnight isn't going to happen, right? You have to break it down into chunks, build it back up, and do things in a different way.
Great question.
Yeah, down from Scotland. You
Yep.
probably remember me, James.
Yep.
I'm interested in trends, and you use the word buying a car. I don't see that in the future. I think mobility as a service is where we're going.
Absolutely.
Energy as a service, heat, cooling, etc., etc. But of course, banking as a service.
Mm-hmm.
I don't see banks as being middlemen anymore, and government's not a middleman anymore. They're not going to get there like that. But in Africa, you could always do it now because of the infrastructure that there is there. That they just don't have our institutions and instruments, which is what I'm working on at UCL with a background of 30 years,
Yeah.
20 years in fintech, before
Yeah.
we called it fintech.
Yeah.
And
No,
I'm
absolutely.
interested in the legal protocols. Now in Scotland, we are guilty, not proven, right? It's not just either or, guys.
Yeah.
It's both and. And I think the future lies in clubs. Because clubs can be both open and closed, right? You know, only members can actually be members, only members can use it, but anybody who fulfills the standards and rules can be a member of the club. Anybody here heard of a P&I club? Protection and Indemnity Club, Heart of the City? You haven't heard of it? It's a multi-billion-pound business, right? Certain risks, Lloyd's of London don't insure, never did. Ship owners clubbed together, Thomas Miller, a broker for 140 years, has been a service provider to mutual assurance of shipping risk. Guys, that in my view is where we're going to go. We're going to be seeing clubs. In Africa, chamas, Ian Green Chama Pesa, you might have come across.
Yep.
ID gets very interesting when you actually verify via clubs.
Yep.
So I'm just chucking a big bomb into the pot here, because I don't think banking's going to look anything like it currently does within 5 years. Completely different.
And if that's banking as a service, maybe that's a good segue into the next.
It is actually.
Yeah?
Before.
We didn't pay you for that part, right? Just free food and drink.
You did, I'm drinking.
I enjoy it. But we're going to, before we bring Sam on stage, don't go away, we're going to go a little bit off piste, and thank you, as every skier knows, Gavin, please come this way, as every skier knows, off piste is where the fun is to be had even. James talked about Gavin and referenced Gavin at the top of his presentation. For those of you that don't know Gavin, it's my great pleasure actually to introduce you to Gavin Littlejohn, who I worked with on a project, and he was also a very good friend of mine. Gavin, amongst all of that, is actually the founder of F-Data, which is an industry organisation. I would like, James, don't go away. I would like Gavin just to talk a little bit about F-Data, and Open Banking Excellence and F-Data are working out how to use the word I throw in to collaborate together, because I see them being complementary. I see them being the yin and the yang. So more on that one. James, Ross and I have worked that one out with Gavin. But I just wanted Gavin to do a little bit of a check-in with you here.
Thank you very much, Al. So yeah, I'm Gavin Littlejohn. I've been in the open banking movement for quite a long time. I was involved in the negotiations to have account aggregation into PSD2 in 2013. At the time, the Treasury asked me to be involved in a forum to create a group for the fintechs to enable the banks and the regulators to have a party to negotiate with. So, with James and a number of other colleagues in the industry who'd been around for a while, some of whom were competitors, some of whom were in the supply chain, we formed the Financial Data and Technology Association to advocate for open banking and open finance. Together, we worked to interpret the Second Payment Services Directive through APIs, because don't forget, nowhere in PSD2 does it mention that through that market. The thought of using APIs came later. In 2015, James and I and a group of others were involved in proposing and working with the banks in the Open Banking Working Group to create what became known as the Open Banking Standard. And it was at that time that the Office of Fair Trading, now the Competition Authority, stepped across and said, you know what, we quite fancy using the Open Banking Standard as a method of stimulating competition, rather than breaking up the banks or finding methods of finding them ever larger sums. If we enable the data to be free, then we can enable proper competition. So the Trade Association, F-Data, has been involved in the formation of open banking in the UK. I sit in the steering group representing the FinTech audience. One of my colleagues, Ian Major, who's also in F-Data, represents the price comparison credit reference bureaus. We previously represented the challenger banks at the outset. And we've had to hold the process to account to look at better outcomes. But I guess the really interesting sort of thought process now is, one, FData is now a global organization, so it's as large in North America as it is in Europe. We have got all of the main aggregators and large fintechs in the North American market representing in Mexico, US and Canada. We've just formed the US Open Banking Working Group where FData is co-chairing. We've set up FData in India and working on setting up in Japan. We've launched a chapter in Australasia. And in most of these markets, they're looking at, obviously, access to transactional payments data as a fundamental, but they're also looking at whether or not they go straight to open finance. So we can see in the Indian model, in the Australian model, the fundamental building block is a customer data right. They're working in the same model in Russia. The Brazilian market and the Canadian market, they're going through this live transition phase at the moment of open banking, are exploring whether to add in loans, mortgage, savings, investments, pensions, retail insurance. So all of that's currently kind of underway. And as a trade association, we lead the negotiations, we organise the standards, we explain how liabilities models work, how dispute resolution mechanics operate, we advise on the security profiles of the APIs, and we basically work with the regulators and policymakers on the design of open finance.
I'm going to cut in because Gavin is downplaying the role of FData. I think FData is a great example, and I think it's to a certain extent what we're trying to achieve with open banking excellence is bringing the industry together. Open banking wouldn't be what it is today, as compatible and friendly to fintechs, if it wasn't fintechs competitors getting together and arguing our point of view. I think it's fair to say there's probably a long list of things, whether it's customer experience, whether it's now the RTS, whether it's the chain of liability, or whatever it is, that has happened because as an industry we've been able to get together, pull our own thoughts together and drive an agenda forward that balances the conversation.
Like the name of the account holder is a recent example.
Account holder names, absolutely, right? Is a great example of that, where a lot of the industries has been pushing back on providing it, maybe hinting at that it would be provided through commercial APIs or other reasons, but actually is fundamental to the value of a bank statement. If open banking is all about sharing what's on my bank statement, why doesn't that include my account holder name? Because it is my statement. I share that statement all the time. So making these arguments, I think, has been incredibly useful by FData. So.
Without it being a bit of a Gavin Lovin, he had actually underplayed the role that he had in bringing open banking to the UK. So what we want to do in Open Banking Excellence is have FData here so you can check in with Gavin or other people from FData, because he's obviously, as you can hear, he's not always in the UK. The FCA are going to be here, so they've got a warm, friendly place, and you can check in with them. Ed Cody from OBIE couldn't make it this evening and sends his apologies. MasterCard are here to check in. So that's the type of environment that we're looking to create. But just so you know, when you are checking in with Gavin, you're checking in with a huge depth of resource and industry knowledge, because he was one of the fathers that brought open banking to the UK. Is that fair to say? Bit of a Gavin Lovin.
We're a not-for-profit trade association. If anybody is interested in getting involved in our community, we're driving the agenda. We'd be happy to have you to join those discussions. Thank you.
Thank you very much. Right, back on piste. Where is Sam? Sam, come this way.